So I'm going to first start with a really open-ended discussion and ask our panelists to make their opening remarks. So here we are, the very first opportunity. We really appreciate that you've joined us on this early stage in the year for a discussion on the future of insurance.
No, thanks, Manoj. I think it's my pleasure to be here. I think insurance is probably one of the kind of industry in India which will go through a huge amount of disruption, redefinement, or I would say a complete makeover over the next couple of years. And some fundamental points. I mean, penetration in India is pretty low. I think general is about 1%. Life is just about 3.2, 3.4%. Though the growth has been pretty good in last 2-3 years because of various reasons. But still, I think the penetration is pretty low, and it's a push product still in most of the segments, except wherever the regulatory sort of requirements are there. So I think the topic which I want to pick up in your 2025 kind of a vision for the industry is that how do we look at this 3D approach, which is basically that, disrupting the distribution of insurance through digital. So basically, as digital is basically underlying layer in most of the disruptions which are happening globally, I think in Indian ecosystem of insurance, when we are looking at scaling up multiple times in next couple of years, I think, disruption through of the distribution. I mean, obviously, there'll be a lot of innovation happening on the product side. There'll be a lot of things happening on the other areas of insurance facets also. But I think distribution is the area which I want to bet myself on. And I think using digital to drive all of that is something which I'm looking forward to in next 2 to 3 years. Yeah. So that's my 2 minutes.
Sthanaji, your opening remarks.
No, thanks, Manoj. I've been telling my team that there is never a better time to be in the general insurance business. But I've been doing that for 10 years now. And the fact is that it remains true even today. Right? So when I look ahead, as you said, let's look ahead. I think when you look ahead, I see fantastic prospects for the general insurance business in India. Is it going to be a smooth ride, a straight line? Certainly not. It will have its kinks and it will have its pulls and pressures. But if I was to look at, what are the challenges in front of us for the next few years? This is the Amar Akbar Anthony of the general insurance business, or the AAA, right? Which is basically awareness. So that's a big challenge for us. Access, which is distribution, which you talked about. And the third A is affordability, right? Which is the ability of the underinsured and the underpenetrated to actually afford insurance, right? So if we are actually able to solve this AAA equation, I think, we are set for, a fantastic time as far as the general insurance business is concerned. So I'll probably restrict myself there and pass it on.
Thank you. Monish, please.
Yeah, thanks a lot. Good afternoon to everyone. Happy New Year as well. And thanks, Manoj, for inviting me here. So I think that by most industry estimates, the industry is expected to grow about 14 to 15% in the next 2 to 3 years. Having said that, since the insurance industry opened up about 23 years back, I believe that today we are probably in the perfect storm where we would see an amazing amount of growth happening over the next 2 to 3 years. Great foundations, right? And I think that purely from a numbers perspective, when we started in 2000, when we opened up, penetration was just at about 2%. Now it's, as Sachin mentioned, about 4.2%. But I think the key figure probably is to look at is insurance density, right? So at that point in time, we were $11. Today, we are at about $80. But the global average is actually about $800. Now, we may not want to compare ourselves to the global average, but the emerging APAC average, and this is the emerging APAC average, that's still about $225. Now, why do we think this is going to happen, and that too in the next 2 or 3 years? So first, I think is that everybody is aware of the demographic dividend. I really don't want to talk about that. But what's very important to understand is our disposable income. So all of us are now witnessing probably this generation of Indians in the next few years are going to be the richest, the wealthiest that we've ever been, right? So more than our fathers and the forefathers and so on and so forth. So what this translates is that when the disposable incomes are going to rise, the financial services are going to rise disproportionately high. So we are really going to see that multiplier effect coming in financial services and then insurance in particular as well. Last D that I would want to talk about is on the distribution side. And distribution is not just leveraging digital per se, not just reducing the customer friction, but it's to say that how can you really leverage ecosystem play? How can you come up with embedded products? How can you suddenly expand your market size by looking at industry tie-ups, which will then suddenly expand the amount of available market?
Me by talking about the 3 A's. Internally, we call it the 3 D's of insurance: distribution, digitization, diversification. As Rupam was saying, there's never been a better time to be in GI sector, and he's been saying it for 10 years. I've been telling everybody I know for the past 15 years that there's never been a better time to be in India. I think India is the future, and we're lucky to be a part of the industry which is defining the way India looks at protection and savings. Why did I talk about the 3 Ds? I think the entire Bharat tech stack that India has built out is really going to help us gallop compared to rest of the countries in terms of both financial protection as well as insurance distribution. What we really need to focus on is how do we take insurance to the masses? How do we make sure that somebody sitting in a small village in Bihar is able to buy the same protection or get access to the same protection which somebody sitting in Delhi is getting? How do we make sure the people who are distributing insurance are able to increase their income? Because let's be very honest, if we really want to increase penetration of insurance, the regulator can call it Bima Vahak, we may call it POS agents, insurance company may call them agents. They really need to be incentivized to learn and sell more products. We really need to focus on digitization. How do we make sure that insurance can be bought with the scan of a QR code? How do you protect an entire family by scanning a QR code? Thank you.
So let's try to dive a little deeper into some of these issues. Insurance being a heavily regulated industry, I think we should start with what the regulator is thinking and doing. And one of the amazing things that the IRDA is doing is liberalizing insurance in terms of attracting new players. To what extent do you see personalization being possible? Because I guess one of the main reasons is that insurance is a difficult product to understand and to buy. Would someone like to talk about how personalization may make a difference?
So, Manoj, I think what you're talking about is basically trying to, fit the product to the needs of the ultimate buyer, right? And I think that's probably something which is the duty of all of us. Because if we don't do that, I don't think we are going to be able to sell in a manner which is logical and in a manner which is right. So I think that is very important. Now, when I look at personalization, I think there are 3 levels or 3 layers of personalization, right? So one is the asset level personalization, which is basically saying, okay, I have this asset which I want to insure, and then, so, for example, I might have a, normal car, and you might have an EV, right? And therefore the need for personalization, which is at the asset level.
Right.
The second level of personalization is at the individual level, right? Which is basically saying, my need is different from your need, and therefore I need that cover which probably you don't need. And the third level is at the servicing level, which is basically saying, I want to purchase my insurance like this, you want to purchase it another way. Or I want my claim to be settled this way, and you want. So I think these are the 3 levels of personalization. And I think what we're starting to see now is actually a move in this direction.
When we talk about hyper-personalization, one of the key things which most of the marketing people relate to is personas, right? To say that how do you define a persona, which is a phenotype of a customer segment, which is showing some similar characteristics. Having said that, we worked with the bank, and the definition of persona is that each and every of our 80 million customers, I'm repeating, 80 million customers is an individual, right? And today, data models are available to actually for you to say that I will actually cater to 80 million personas and track the individual needs and respond. I think the challenge is on the other side. The challenge is that technology is available, data models are available, but most of the insurance companies today are not configured that way to really utilize them and build upon them. And that's the change that we'll see in the next few years on how people make their data models more agile and then build insights on top of that and then take actions on it.
There's always this issue in any industry that should we copy the best of global models, global business practices, global regulatory practices, or should we create something that is more homegrown, something that is more suitable for the requirement of the country or the geography or the customer segment, whatever it is. What do you feel is the right appropriate? Is there more of learning that we should do? Any thoughts on the balance between homegrown innovation and learning from the best?
Before I answer this, I just wanted to say, share an old saying, which goes, "Kosh kosh par pani badle, har do kosh par pani." So in India, your language changes every kosh. Matlab that's an old measurement tool which they used to use for measuring the distance between two cities. And the taste of water changes every do kosh pe, right? Unfortunately, agar we pick up something which is worked in Argentina, US, wherever, Japan, and try to implement it in India, it is not going to work because India is a very unique country. What we need to do is we need to understand the best practices which are there globally, get them to India, localize them, and then implement it. If you just try to ape whatever is happening outside, it is not going to work. And we've seen that happening across multiple industries. We've seen this happening across multiple segments. You really need to create for India. You need to build for Bharat. Because within India, there are two Indias. One is Bharat, one is India. So you need to plan for both.
And you think we are going in that direction as a country?
Absolutely. I have had the privilege of working with some of the best minds, both within my organization and within the industry. I think the industry as a whole understands what needs to be solved for Bharat and how it needs to be solved. At the same time, they are also conscious of what needs to be solved for the rapidly changing India. And the industry is actually working towards that.
You know, having worked with multinationals for now almost 35 years, you know, across banking, non-banking finance, and now insurance, I have seen many failures of those, you know, practices, processes, products, which were tried to be picked up and dropped on India. It just doesn't work.
Is that a reason why penetration is so low?
No, I don't think that is the reason. The penetration is low, but that does not work. So what Ankit is saying is basically looking at it from a bottom-up point of view. And I'll give you two examples. So our payment stack, which is unique in the world, you know, is something which is very Indian, right? Now we're talking of another insurance stack, which is the Bima Sugam stack, which is again going to be pretty unique across the globe. So I think, you know, clearly the needs and the requirements and the economics of the way business is done in India is very different. I mean, can we afford those multi-billion-dollar kind of investment? Probably not, right? And therefore, we have to localize, Indianize, and economize the kind of innovations that we are trying to bring into India. So that's my...
See, and like Ankit mentioned and Mr. Asthana also mentioned that, you know, obviously some of the things globally do come, but they need to be formatized for Indian format, right? I mean, if you take another example of consumer products like McDonald's, you have a McDonald's format in India, which is pretty successful format. I mean, if you go to even tier 4 towns, highways, you would find McDonald's is become a taste of India, right? But then the format belongs to a certain country. Probably we had our own vada pav. We could not create that format. I mean, somebody tried a jumbo vada pav or whatever it is, but couldn't really scale up. So McDonald's format works, but the palate or the taste, you need to bring it. You have to have an Indian recipe for that, right? You can't serve a burger in Manhattan and same burger in, let's say, Gyanpur or Gazipur somewhere, right? But definitely the format of quick service, you go yourself, you pay yourself, you bring yourself, you put a tray yourself. I think that change of behavior has happened in many industries. I mean, if you look at even Coke and Pepsi, that, we are not born with those kind of sort of drinks. I mean, all the Indians are born with more like chas and lassi and chai. But today, if you go to even villages, Coke and Pepsi is considered to be a standard drink, right? Maybe in the smaller packets, maybe in a different, kind of flavor. So I think in insurance also, we might have adopted some of those practices, but the kind of frugalness we have, the kind of cost arbitrage or the cost parameters we have, and the kind of, our own beliefs we have, we can pick up some of those good examples from the countries where it has been established, but definitely it needs to come out to the Indian flavor. And then over a period of time, it becomes like a more of a hybrid component. Yeah.
Because historically, there's always been best global practices India needs to adopt, or every country needs to adopt. That was the standard formula, but for a change, we are talking of localize, customize, personalize. It's kind of new management jargon in a sense that we are now facing. Yeah, Monish.
Just to add, I think, again, we'll be very brief, and on a lighter note, agree with everything that the panelist has said, but what we definitely need from global is capital. So that is most welcome. So capital in developing the insurance industries, investing in the fintechs, taking our losses as well as we grow. But I really do believe that supply of financial services will create its own demand as well, right? And we do need capital for that. Again, on a lighter note, you spoke about 10 years experience, 15 years. I've been doing this for 25 years, trying to attract global capital into India. And my first engagement actually way back in 97, 98 was to do entry strategy for Australian multinational in insurance and pension fund. Same story to say that, India is great, it's happening. That story honestly hasn't changed in the last 25 years, right? So what has changed though is that today, at least I think that we have rest of the other ecosystem elements in play, where probably it is possible that, at a small scale, you can still be profitable. Otherwise, the story used to be that if you're in a life insurance company, it'll take you about 7 years to break even, move to 10 years, move back to 7 years. But today, models are possible to make it more profitable. But I think the short answer is that foreign capital, more than welcome. We can talk about, best practices from a product and underwriting perspective, but that needs to be localized as well.
How do you see the preparation of the India's insurance sector to be able to serve these requirements?
So I think you're right. I think what we're going to see is, trillions of dollars of investment in infrastructure. And we are seeing it around us. I think all of you would have experienced it when you came here this morning, right? With the metro construction and coastal road construction and the Trans-Harbour Link construction. Now, all of these are assets that are getting created and need to be insured. There are a couple of challenges that we have here. And I think one of the biggest challenges is what my co-panelist just talked about, which is the amount of capital that is available for the insurance business today. I think clearly today, when we are looking at a regime of solvency, the way it is defined today, for every additional piece of business you write, you need more capital, right? And these are large exposures that we are talking about. And therefore, we are saying that there is going to be a need for substantial amount of capital. So that's the first challenge we have. I think the second challenge we have is in terms of reinsurance. And I think that is another challenge because, these projects, which are large projects, are substantially reinsured. Right? And therefore, there is a lot of inputs that come in from reinsurers on how these risks are to be managed and how these risks are to be priced. Right? Okay. And I think that is again something which, has over a period of time developed. So I'm not seeing a big gap there. But I think there is some few additional steps that need to be taken on.
What about skills and the underlying technologies that you need to do?
So that is the third thing, which is a lot of this work which is happening on the infrastructure side is new to India.
Exactly.
Right? And therefore, the challenge we have is actually being able to understand how the Indian conditions will impact the risks which will emerge from those projects. So I think the start has happened, but we have still a long way to go there.
So for a typical general insurance company, how would they prioritize between these big opportunities and the 97% under penetration opportunities? Well, do you see more insurance companies coming to the country with specific competencies? So,
if you have heard the chairman of the regulatory body, he's talking about bringing in 100 more. He says this country is large enough for 100 more insurance companies to come. And it doesn't mean that all of them have to be the same type of insurance companies as exist today. So we could talk of an insurance company which could just be writing surety business, for example.
Okay.
Or there could be another insurance company which is basically saying, I'm only going to do business in the state of Uttar Pradesh.
Okay.
Right? Or there could be a third insurance company which will say, I will specialize in infrastructure projects. And that is my core area of focus. So I think the point is that, the kind of insurance companies we have today, which are multi-product, multi-channel, multi-geography, I think those to be morphed into more specialized geography, product, exposure, risk, is something which is probably going to happen in the next few years.
So sounds like what has happened in banking. There are small finance banks, there are payment banks. Likewise, perhaps in insurance, we'll come up with niche. Maybe the regulator will come up with niche playgrounds where more specialized talent can come in. Maybe someone in the power sector, maybe someone in the.
I just wanted to answer to what you asked Rupam. How does he focus or how does he decide whether he focuses on 97% under penetration or he focuses on large scale infrastructure project? You will have to go with both. Because if you want the large scale infrastructure projects to come up, you really need to solve for the 97% who are underinsured. If you don't solve for them, they will not have the economic capability to use the infrastructure which you're getting created.
Right.
Second, skills are something which can be acquired. You can acquire skills by way of training, by way of doing courses. But what we will need to solve for is know-how. And a lot of infrastructure projects which we are creating in the country, we are doing it for the first time. So we will need to get know-how of managing the risks from projects which have been done across. And then we will have to Indianize that know-how and impart training to our people. So skill is a problem, but that can be solved. Know-how is a problem which you need to put and you need to train people. That's what I want to say.
I think to summarize, insurance, great business, past 10 years, next 10 years. Insurance conferences, great opportunity for the next 10 years. Thank you all, gentlemen. Thank you so much.